Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 15th of June. Today, all the lights will fall on the FOMC, which gathers to decide on monetary policy. Following May's disappointing employment report and Chair Yellen's shift in language thereafter, investors are all but certain that the Fed will refrain from acting at this meeting. Thus, the focus will turn to the updated dot plot, the new economic forecasts, and Yellen's press conference following the meeting. We don't expect any revisions to the committee's dots with regards to this year's projections, considering they were already downgraded by half at the March meeting. What's more, we believe that officials are likely to revise up the near-term inflation forecasts due to the further recovery in oil prices since March, something that could support the dollar. As for Yellen's remarks, we expect her to maintain a cautious yet optimistic stance and use this meeting as a stepping stone to prepare investors for a July or September action. Nevertheless, we believe that the FOMC is unlikely to rush into a hike without feeling confident that the recent setback in the labor data was indeed temporary, which in our view makes July an unlikely candidate. We still therefore maintain our call that September may be the ideal time for the FOMC to act, provided that incoming data suggests so. November's gathering is scheduled a few days ahead of the US elections, which makes us doubt that the Fed will change policy in such a period. We don't expect them to risk waiting until December either, as this will be their last chance to hike this year. In Japan, during the Asian morning Thursday, the Bank of Japan will announce its monetary policy decision too, and officials are expected to take the sidelines for now as well. Even though Japan's inflation rate fell further into the negative territory, following the encouraging GDP print for the first quarter, and given that the upper house elections are scheduled in roughly 1 month's time, we believe that there is less pressure for the bank to act immediately. What's more, following Prime Minister Abe's recent announcement that he will introduce further fiscal stimulus in the near future, we believe that the Bank of Japan is more likely to raise its stimulus dose again after and if he wins the election. Let's not forget that in Abenomics, monetary and fiscal policies work side by side, not individually. As a result, we expect a somewhat dovish tone from bank officials, which could open the door for a potential July or September action. Something like that may curb some of the yen's recent gains, but considering the currency's status as a safe haven and this month's upcoming risk events, we expect any such reaction to remain short-lived. As for today's indicators, the UK employment report for April is released. The unemployment rate is expected to have remained unchanged, and average hourly earnings are forecast to have slowed somewhat. This could bring the pound under renewed selling pressure at the release, but we maintain the view that the currency is likely to remain more sensitive to incoming referendum polls rather than data in coming days. From the US, we get the industrial production and PPI data both for May. We also get the Empire State Manufacturing Index for June, but ahead of the FOMC meeting, we believe that all of these data are likely to pass unnoticed. Besides Chair Yellen, we have two more speakers on today's agenda: ECB Vice President Vitor Constancio and ECB Governing Council member Jens Wiedmann. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.